Hey Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.
Good afternoon. All right, let's get it started in here. Getting right down to business. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson at 3, and just before the 790 KBC News Blitz with Randy Wang at Gabba Dabba Doo Time at 5. Mottek On Money. We're live on the air here at 790 KBC, streaming live online worldwide at kbc.com, and the on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all your favorite podcast platforms. Big day today. We had a big rally early on, but it fizzled out, and we had a mixed finish on Wall Street following the big decision today by the Federal Reserve to cut interest rates again for the second time this year. The Dow, which started the day at a record high and kissed new all-time highs during the trading day, pulled back 74 points at the closing bell. The S&P 500 ended down a fraction off its all-time high, but the star of the day, the NASDAQ. Tech stocks rallied to all-time highs, and the NASDAQ moved up 131 points to a record high close of 23,958. Stocks did pull back after the Fed Chairman Jerome Powell indicated a December rate cut is far from a foregone conclusion. Those are his words. Far from. The Federal Reserve lowered interest rates at its second consecutive meeting today, but the Fed Chairman cast down on expectations for another rate cut this year. The Fed chairman made an unusually pointed intervention at a news conference following the Fed meeting wrapping up today to push back against market expectations that a rate cut at the Fed's next gathering in December was a foregone conclusion. Now, the latest quarter-point cut will reduce the Fed's benchmark short-term interest rate to between 3.75% and 4%, the lowest it's been in 3 years, and down from a peak of around 5.4% maintained for much of last year. What the Fed did today impacts the prime lending rate charged by major banks, and that prime rate goes down a quarter percentage point, and that's the one that impacts business as well as consumer loans. NVIDIA, one of the stars of the day, now the first company to hit a $5 trillion market value. This is a big milestone here, and NVIDIA stock closing at an all-time high today, up more than $6 at $207.04. Very big news there with NVIDIA stock jumping to a record high after President Trump stoked optimism for an easing in the curbs that have weighed in on sales in China. The president said he may bring up NVIDIA's Blackwell AI processors in his highly anticipated meeting with Chinese President Xi Jinping tomorrow, and that'll be later this evening our time. We'll continue to monitor the very latest headlines coming out of Asia as the president gets set to meet with the Chinese leader. Amazon and some of the other big tech names also in the spotlight this week. And we got to earnings news from Meta, as well as, some of the other big names are reporting here this afternoon as well. We'll have extended market coverage here coming up later this hour with a giant on the business scene, veteran market strategist Art Hogan, chief market strategist at B. Riley, which happens to be based right here in the Los Angeles area, will be joining us live later this hour. Also, we are going to be speaking to TRACY Hernandez, founding president of the Los Angeles Business Federation, LA BizFed, the largest business group in Los Angeles County. She's also heading up the New California Coalition. We'll get an update on what's happening on the business scene from TRACY Hernandez. She'll be joining us live later this hour. But first, on your money, the markets, the economy, and the whole works now on this big day, the one and only Ben Stein for our occasional Frank and Stein conversation, which we have here as needed. Ben Stein, of course, the famous economist, attorney, author of numerous books, host of the game show, Win Ben Stein's Money, actor, too. Yep, that Ben Stein, who famously gave the lecture on trade policy in the movie Ferris Bueller's Day Off, and one of the most iconic scenes in American cinema. And most importantly, he's famous for his many radio appearances over the years right here. Frankenstein with your pal, Ben Stein. Thank you very much for taking the call here this afternoon.
My pleasure, of course. My
big
pleasure.
Day today.
My great pleasure.
Big day, big week, big year. Give us your thoughts here today, Ben Stein.
Well, I've seen markets come and go. They will fluctuate, as J.P. Morgan said, and though they're fluctuating in an upward direction now, I think people believe that the aggressive Federal Reserve fight against inflation is pretty much over. I think they're, with respect to Mr. Powell, I think they're mistaken. The fight against inflation, as any shopper at any grocery store or any furniture store or any real estate entity would tell you, that fight is far from over. Inflation is still roaring along. It's a stunningly aggressive beast, and I think even the most clever, intelligent person can have very little hope of defeating it. And can it be stopped? The economy will have to slow down for it to be stopped. We don't know how fast the economy is going right now because of the idiotic government shutdown, not allowing us to have up-to-date data. But seemingly, if I may say this, based on the anecdotal data, the inflation is just terrible. And I question very much whether the policy of keeping high interest rates will not come back. I mean, we have got to do something about this inflation. Inflation is a tax on every family, rich, poor, middle class. I don't think that battle is over yet.
Inflation, as we've discussed here, is very sticky. Once it goes up, once prices go up, it's tough to get them back down, although real estate, something you love. It can't. There you go. Well, that's the answer. On the air live with Ben Stein. And let me ask you this. One thing we are seeing a softness in, apparently, is real estate. That latest Case-Shiller report, the Totality CoreLogic S&P Case-Shiller report that came out this week, showing prices leveling off and in some places actually pulling back here in California, including Los Angeles, as well as San Diego and San Francisco, cities that are included in that index. What are your thoughts here with real estate? Some cooling down here of real estate prices finally.
There's no doubt about it. It's happening. I can see it around me in Malibu. I can see it around me at our house in Beverly Hills. I mean, even in a really, really nice neighborhood in Beverly Hills, I don't deserve to live in, but it's a hell of a nice neighborhood. And it's cooling down everywhere. But let's remember, that's after about 20 years of quite consistent, rapid price increases. And just recently, after about 10 years of extremely rapid price increases. So people who bought real estate, unless they bought it yesterday, are still happy. It should be happy with their purchase. Real estate is a great, great thing. You get the capital gain, you get the ability to live there rent-free, and you get what we economists call imputed rent. That is, if I buy a house and I get to live in it and enjoy it, and might rent for $20,000 a month, and believe me, there are plenty of houses in my neighborhood that do, maybe even more, I don't have to pay tax on that imputed rent, which is the same basically as interest on a bond or any kind of interest-bearing instrument. Real estate is still a great thing. Yes, it's going to have fluctuations, but over long periods of time, it's a great, great thing.
Since you mentioned Malibu and you have a place there, what is the situation there now? We've been seeing those articles about how people are throwing in the towel following the horrific firestorms and a lot of properties being bought up by foreign buyers and so forth. What's your view of what's happening there following that terrible disaster there?
No doubt about it. The incredible days of incredible skyrocketing prices are, at least for the time being, stopped. Will it ever become a bargain again? No, I don't think so. Well, my lifetime has not got much more to go, but most people's lifetimes, I think, if they get into it now, if they have another 20 or 30 years, or even another 10 years that they can go before they have to do something drastic like selling or giving up, they'll still do fine. Real estate in Southern California, picked with care, bought by patient people, is a great, great thing. It's a gift. It's a gift from God. It really is.
Looking back over the years, and I know you've written so many books, including one with the famous title, How to Ruin Your Life. Looking back over the years, what would you do anything differently as far as your investment choices are concerned? I know you love real estate and you love Southern California, so we're on the same page here. Give us your thoughts here. Would you do anything differently, knowing what you do now?
Yes, I would. I would have chosen investments that are far more liquid. I've done well with my real estate investments, but when you need money and a fairly good amount of it in a hurry, real estate is not where you want to be. At one point, I had 14 houses, none rented out, all lived in it and enjoyed by my wife and me. And so I should not have had that many. I should have had a more sensible, non quite insane amount of real estate and kept some more of it in cash. It's a terrible thing to want cash, to need cash, and to look at your real estate portfolio and say, gee, there's a lot of money in there, but I cannot pay my electric bill or my tax bill with a brick or with a square foot of soil. I wish I had chosen more liquidity. That was a serious mistake. Very, very, very serious mistake.
On your live with Ben Stein, well, thank you for sharing that insight with us on your vast experience here. In just hours from now, in South Korea, President Trump is set to meet with the Chinese leader, and what's going to be an epic meeting focused on U.S.-China trade relations and trade policy, and perhaps some breakthroughs here. You famously gave that lecture on trade policy in the movie Ferris Bueller's Day Off, and that famous law that was passed on tariffs back in those days.
Hawley Smoot, or maybe it was Smoot Hawley. Depends on which, whether you're following it coming out of the Senate or the House. But yeah, they made terrible, terrible mistakes then, and I think we're making some pretty damn serious mistakes now in terms of trade policy. When Mr. Trump, whom I love, I'd vote for him. If I could live 1,000 years, I'd vote for him a lot more times. But it's a mistake to be loading up the consumer with the burden of tariffs. It's just, it isn't fair to the consumer. It isn't really fair to anyone.
On their line with Ben Stein, if you could put your attorney hat on for just a moment. Looks like we're just weeks away from a possible Supreme Court decision on whether the president is even allowed to impose these tariffs, and the Treasury may have to refund $1 trillion. What do you think is going to happen?
I don't know. When I studied law at Yale, which was a long time ago, we pretty much agreed that the Supreme Court would just go with whatever direction the wind is blowing. The wind is blowing from the Trump land, and I don't think the Supreme Court or anyone else is going to stop Mr. Trump from these things. I mean, if Mr. Trump wanted to arrest everybody who was importing things from North Carolina or South Carolina, North Korea. I guess we're not going to North Korea, that's for sure. South Korea, we might or might not be able to do it. But the court is not going to do anything drastic to stop Trump. Trump is just running the show right now. He's not a dictator. He's not Hitler. To call him Hitler, as some demonstrators did, is an outrageous, obscene, disgusting lie. But I don't think the Supreme Court is going to stop Trump from anything.
Speaking live with Ben Stein, in an epic year here in which the Hamas-Israel war has achieved a ceasefire. We did see a flare-up recently this week on what's happening there between Israel and Hamas. But give us your reaction to President Trump's brokered deal for peace in the Middle East.
Well, I think it's very important. I mean, the Middle East is the last place on earth where we seem to be unable to get peace. I'm reminded of something nobody else on your show is ever going to tell you. A long, long time ago, I was sitting in Mr. Nixon's office in the Western White House with Mr. Nixon. Nobody else, just Mr. Nixon and his dog, King Demo. And he went through a list of the world's trouble spots and how he would solve them all. He said, they can all be solved except for the Palestinians. And he said, there's no solution there except to hang them all. And he laughed, but I don't think he was kidding.
What about Ukraine and Russia, the next hot spot that needs to be addressed here?
I think Putin, however it's pronounced, has done a disgraceful thing. He started a war against people who are doing nothing bad to him or to his Russian people. And it's disgraceful what he's done. His missiles, rockets, and the Russians have a hell of a lot of them attacking civilian targets. It's just disgraceful. Mr. Putin has really shown himself to be something really much less than we had hoped for from him. Much, much less. And why Mr. Trump continues to trust him is a complete mystery to me.
On the Air Live with Ben Stein, a lot of people heading to Dodger Stadium this afternoon for the fifth game of the World Series. Go Dodgers. Here's something we haven't ever talked about, Ben Stein. Are you a Dodgers fan?
Oh, yes, of course. I've been in L.A. most of my life. Of course I'm a Dodgers fan. I mean, are you kidding? Of course I'm a Dodgers fan. I would not even consider not being a Dodgers fan.
Absolutely.
And not only that, we have a lot of households help in our house, and they're all Dodgers fans. And I don't want any of them to poison me when I'm having breakfast tomorrow morning. So, yes, I absolutely am thrown down. I will throw down with the Dodgers anytime.
All right. Well, a lot of excitement for tonight's game, and then they move on to Toronto for the rest of the World Series. So we're certainly going to be watching what's happening there. Now, as always happens when you're on, people want to make sure that it is really you. And would you be able to take the role for us here at this time?
Yes, sir. Adams, Adamley, Adamowski, Brown, Butler, Bueller. Anyway, God bless you, Frank. Always a pleasure talking to you. And God bless the Dodgers. Go Dodgers Blue.
That's fantastic. Ben Stein, thank you very much for joining us live here this afternoon for our occasional Frank and Stein conversation here on Mottek On Money on 790 KABC. Mottek On Money continues here, 790 KABC. Good afternoon. Record-shattering day on Wall Street once again. Stocks took off early on to record highs, but closed mixed with the NASDAQ, the only major average, hitting a record high at the close today. The NASDAQ gained 131 points, settling at 23,958. The S&P 500 closed down a fraction off its all-time high at 6,891. And the Dow, which started the day at a record high and moved higher early on, came in for a closing loss of 74 points at 47,632. The yield in the 10-year note is shot higher to 4.07%. As expected, the Federal Reserve today decided to cut short-term interest rates by a quarter percentage point. We did hear from the Fed Chairman Jerome Powell half an hour after that announcement was made, and he indicated a December rate cut is far from a foregone conclusion. That appeared to have rattled the markets, and some money came off the table, and thus the mixed finish at the close today. NVIDIA, the Magnificent One, continues to live up to that name, hitting a record high today at more than $6 at $207.04. And also the first $5 trillion company, Apple, moving higher slightly by 70 cents at $269 and change. Apple earnings come out tomorrow afternoon, usually a half an hour after the closing bell, so we'll be keeping an eye on that one. And tomorrow we're scheduled to speak live with Daniel Ives from Wedbush, the top tech analyst in the world at this point. He'll be joining us live tomorrow afternoon. Meta came in for a closing gain of 23 cents at $7.51 and change, and has plunged about $55 in after-hours trading. This on its earnings news. Meta stock moving lower after taking a $16 billion tax hit and an earnings miss by a wide margin. Microsoft stock is down despite beating earnings expectations. We'll have extended coverage here shortly with one of the leading market strategists. Art Hogan will be joining us from B. Riley coming up here shortly. The price of gold pulling back today by about $40 at $3,958 and change. Oil slightly lower by 26 cents at $60.22 a barrel. Checking the cryptos now. Bitcoin up about 600 at 111,200 or so. Ethereum at 39.40. Solana is at 195, and Doge at the moment at 19 cents. And now the latest news on 790 KABC.
Hey, Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.
The United States Soccer Federation presents the U.S. Soccer Podcast.
Searching for an inside look at the people, stories, and passion that fuel the state of soccer in America.
Who's going to be the key man for the U.S. men's national team?
First and foremost, they need to win.
There's something so fun about being the underdog.
You're playing with house money almost.
But what does this success mean for the future of U.S. soccer?
Ooh, you're getting deep now.
This is where soccer will come to life.
The U.S. Soccer Podcast. Follow and listen on your favorite platform.
Mottek On Money continues here, 790 KBC. A well-fed rally this week ahead of today's big announcement by the Federal Reserve. As was widely expected, the Fed decided to cut the short-term benchmark interest rate by a quarter percentage point. Stocks briefly kissed new all-time highs, but we had a mixed finish with the NASDAQ, the only one of the major averages to achieve a record-high close today, up another 131 points at 23,958. The S&P 500 closed down a fraction from its all-time high, and the Dow down 74 points from its all-time high. Extended market coverage continues now. One of the world's top market strategists, Art Hogan, is with us, chief market strategist at B. Riley, which happens to be based right here in the Los Angeles area. Art Hogan, thank you very much for taking the call here this afternoon.
Hey, Frank, thanks so much for having me. It's always a pleasure to catch up with you.
Likewise, Art, thank you very much, and certainly a big day, a big week, a big year, really. Give us your impressions of this latest market action here.
Yeah, interesting. Yeah, probably the busiest week in terms of catalysts that we've had this fall, and it kind of hit a crescendo today. So when you think about the magnitude of what was happening today, we actually had a Fed meeting, and a Fed meeting that happened without any economic data from the government. So that in and of itself was going to be an interesting press conference for sure. And then on top of that, we had about $11 billion or $11 trillion worth of market cap reporting earnings during the course of the day. So all of that gave us a lot of work to do and a lot of things to pay attention to. So one at a time, I would tell you, the Fed did, as you mentioned, very much as expected, cut rates by 25 basis points. But that wasn't the end of the story. So the Chair Jay Powell made it very clear that there is no guarantee that they're going to cut rates again in December. And the market had assumed a December rate cut. So he made it very clear that that's not necessarily on the table. He didn't take it away, but he said it's certainly not a lock. And he made that very clear during the press conference several times. And the market reacted negatively to that. Right when that part of the conversation and the presser started, market sold off. They rallied some into the close, and the NASDAQ was able to close in positive territory, but that was a relatively hawkish rate cut. And I would offer up that disappointed markets and likely will follow through tomorrow and on the disappointing side, because the markets had been anticipating a December rate cut for quite some time now.
On the line with Art Hogan, chief market strategist at B. Riley. And another part of this, looks like the Fed is trying to get control of its balance sheet. Is that significant in the context of everything else that's happening at the moment? And maybe you can explain this quantitative tightening that was discussed today as well.
Yeah, so what happens with quantitative tightening is actually when the Fed lets the balance sheet roll off, meaning when matured assets roll off the Fed and they don't reinvest that's called quantitative tightening. Quantitative easing is when they're in the open market increasing the size of their balance sheet. So what they're basically saying is they're going to stop quantitative tightening, which is dovish in and of itself. They want to get rid of the balance of the mortgage-backed securities they have. They'd prefer to replace those with short-term treasuries, and they'd like to have the balance sheet mirror more of what the treasury issuance looks like coming out of the Treasury, and there's going to be plenty of that. So I would say that was a dovish piece of information, but not surprising. Chair Powell had leaned into that a bit in one of the conferences he spoke at last week. So we just didn't know what the timing was going to be on. Now we have a firm timing on that.
Interesting. We did see some reaction in the bond market with the yield on the 10-year note, which had been below 4% this morning, now back up to 4.07%, the one that impacts the fixed-rate mortgage rates. And certainly that was a ray of sunshine, seeing that bond yield below 4% and impacted mortgage rates, which were pretty much at lows for the year. We're just hours away from the big meeting now. President Trump and the Chinese leader, certainly anything related to U.S.-China trade has either rattled or cheered the market. What do you think is going to happen later today?
Yeah, that's a great way to express that, Frank. It certainly has. If you think back to last week when it felt like tensions were getting worse, not better, and the president was threatening to increase tariffs on China, the market really went south quickly. And the fact that they're actually having this meeting, the market's been celebrating that. And I think that anything we can do to get to the end of this trade war, meaning, know in fact what the ultimate results are going to be, where tariffs are going to stand, would be a market positive. And unfortunately, it's been since, the beginning of April when this all started. So we're 7 months into this, and yet we still don't know what the rules of the road are. We'd love to get some positive news out of this meeting this afternoon, even if it's just a framework of a deal or perhaps a delay in any of the the sanctions that China want to put on in terms of things like rare earth minerals and magnets and export controls, et cetera. Any good news coming out of that would certainly help bolster investor confidence. And then we need to move on quickly to countries like Canada and Mexico, two very important trade partners where we're still in limbo on trade there.
All right, it's already Thursday in Asia, so we're hours away from that big meeting at that summit there, on the sidelines of the summit there in South Korea. The other big story, the tech rally continues, including the Mag 7 names and including the magnificent one, NVIDIA, which we've talked about all year, and hitting a record high today, up more than $6 at 207 and change, and achieving an astronomical market cap. But what's your reaction to that big news here today?
Yeah, we'd get concerned if a company grew this fast, and there wasn't a good fundamental reason for it. But when we think about what's driving NVIDIA, they're actually at $5 trillion of market cap and only trade at 35 times. It's the exact same multiple that Apple trades at, same multiple that Microsoft trades at. So they continue to grow their earnings and revenues. They're sitting at the center of this artificial intelligence revolution. They sell the most important chips to all the most important players, and they've done a very good job at navigating the political waters and finding new customers and improving their chips on an annual basis. So, yeah, this has been the poster child for this AI revolution, and they don't report until November 19th. So we won't know what the results are, but I can guarantee you this. Their PE will go down after they report because they always increase their guidance. So this is a company that's done a very good job. Remember, Frank, these guys started out years ago as the king of the hill for things like Bitcoin mining. And then they transitioned into being the king of the hill for gaming when that was the in thing. And then long before ChatGPT was released 3 years ago, they were developing the fastest, most powerful chips that are now needed for that GPU growth and speed for development of large language models for artificial intelligence. So they've been able to create themselves in the center of what's important for the better part of 15 years, and it's just now that artificial intelligence has thrust them into a place where they're the most important artificial intelligence company right now.
Absolutely amazing. On the line with Art Hogan, Chief Market Strategist at B. Riley. And fast forward to today's earnings news. Looks like Meta closed slightly higher today, but pulled back after hours on its earnings report. And Microsoft also, that stock down on its earnings news. Anything that caught your attention as the earnings parade continued this afternoon?
Yeah, Meta was surprising that it's down so much. Meta is the parent of Facebook, and they had a one-time item that had to do with tax treatment, that had to do with the new big beautiful bill. It's a one-time item. It's now it's written off. If not for that, they would have beat the consensus in earnings by about 10%. So likely an overreaction. But the problem, Frank, is you come into these earnings reports at or near an all-time high, and even if you check all the boxes and don't have any bumps in the road, you're going to get punished if there's not something that you can really point out that's much better than consensus. And I think that was the case with Meta, trading at an all-time high coming into the print, and they had a one-time charge-off that won't be recurring. So the adjusted earnings, if not for that charge, were 10% better than estimates, and yet the stock's down about 9%.
On there live with Art Hogan at B. Riley, and tomorrow Apple, right, among the big names that'll be reporting. What's your expectation there?
Now, Apple's coming into this at an all-time high. They've got a lot of good things to say, and especially since the case against Alphabet or Google was thrown out about a month ago. So Google can continue to pay Apple to be the embedded browser on their 1.5-2 billion install base of smartphones, and I think that's important. But it also frees them up to now make partnerships to assist Siri in their artificial intelligence business model. So I think we'll start to hear some announcements from Apple, whether it's at the earnings announcement or in a conference call, press conference, et cetera, about who some of the likely partnerships is going to be. But I also think that the latest iteration, the iPhone 17, is selling much better than the 16 did. And the uptake for that coming into the holiday season looks to be spectacular. So I think Apple's only got good things to say, and I don't think we're going to have one of those situations where we're concerned about it like we're concerned about Meta tonight.
All right, and last but not least, are you paying more attention to crypto these days with Bitcoin hitting an all-time high above 126,000 not too long ago, and then we've seen downdraft recently, and right now we're looking at Bitcoin at about 111,000 here. Ethereum is back below 4,000, and the list goes on. What do you have to say about crypto nowadays?
Well, I can tell you this. Crypto, like a lot of the other alternative assets, the hyper speculative end of the market, whether it's crypto or some of the independent energy companies that have small nuclear reactors or some of the quantum computing companies have all come under a little bit of pressure over the course of the last several weeks. And I think it's just some of that speculative fever coming out of them. I think crypto is going to be in a good place. The ease of use with all the ETFs that you can use, not having to have a wallet and going to a crypto exchange. I certainly think its path and direction is higher, but I'm not surprised at all at the kind of volatility we see. When crypto and Bitcoin go higher, they go higher fast. When they come down, they correct pretty hard too. And we're seeing that in some of the other speculative edges of the market.
Art, thank you very much for taking the call on this important day here today. That is the one and only Art Hogan, Chief Market Strategist at B. Riley, which happens to be headquartered right here in the Los Angeles area. Art, thank you very much for joining us live here this afternoon.
Thank you, Frank. Always a pleasure.
Thank you very much, and hope to talk to you again very soon. And let's get out to the freeways now on 790 KABC.
Hey, Bruin fans, want to go behind the scenes with your favorite teams and athletes? How about getting exclusive merch and opportunities to enter sweepstakes like sideline access at the Rose Bowl? Introducing Blue and Gold Society, UCLA Athletics fan membership program created to support Bruin student athletes. Members receive benefits like exclusive gear, videos featuring insider stories, and incredible experiences courtesy of UCLA Athletics. Sign up today at blueandgoldsociety.com.
The United States Soccer Federation presents the U.S. Soccer Podcast.
Searching for an inside look at the people, stories, and passion that fuel the state of soccer in America?
Who's going to be the key man for the U.S. men's national team?
First and foremost, they need to win.
There's something so fun about being the underdog.
You're playing with house money almost.
But what does this success mean for the future of U.S. soccer?
Ooh, you're getting deep now.
This is where soccer will come to life.
The U.S. Soccer Podcast. Follow and listen on your favorite platform.
Mottek On Money continues here, 790 KABC, big week on Wall Street. And let's get right down to business here on the Main Street economy now with a giant on the LA business scene who's worn many hats over the years, one of the busiest business leaders I know, but she's taking some time to be with us today, and that is TRACY Hernandez, the founding president of the Los Angeles Business Federation, LA BizFed, the largest business group here in Los Angeles County, and she also heads up the New California Coalition. Now, she served as CEO of both BizFed and the New California Coalition for the past couple of years now. She previously served as the publisher of the LA Daily News in the San Fernando Valley. TRACY Hernandez, a tireless champion for business, and has kept this business audience here well informed over the years on all of the big issues facing business in Southern California and celebrating inspiring businesses at the BizFed Busy Awards every year. The awesome TRACY Hernandez, thank you very much, TRACY Hernandez, for taking the call with us here this afternoon.
Frank, it's so good to be with you.
Wonderful to have you with us here, and been looking forward to this conversation. First of all, tell us about your big announcement there.
I'm thrilled to. In fact, Frank, it was such a great introduction there, but, you know, people, your listeners need to know you and I go way back, right?
Yep.
And when I was, as you mentioned, running the Daily News, and you've been in media and just a stalwart of bringing real-time, valuable information to the news that everyone needs to have our community thrive and the business community be healthy. And I think I was looking back, but I believe you were my very first interview when we started BizFed. It was this, you know, crazy kind of groundbreaking idea that had never happened before. And it was simple but unusual, and that was to do a federation of all the existing business groups into one united voice so we could strengthen our civic action, our political action. We could get more involved at every level of government, and that dream came alive in 2008. And today, this week, have announced that it's time for me to pass the baton to the next amazing leader. That's 17 years of impact, 245 distinct and different business organizations representing, believe it or not, 420,000 companies, employing 5 million people. And now we're getting involved at every level of government, all the 88 cities in the county, the state, regional, regulatory boards. But we have done so much, and it's a mighty machine with quite a bit of guts and gumption, stepping up to help the elected officials stay true to account to those that get them into office, and us collectively have better outcomes for all of our communities. So anyway, I'm passing the baton now. I'm announcing to you and your listeners, and we're looking for the next person to be the CEO for the next couple of decades to take the mighty voice of business to new heights. And then I'm going to press on in the same business, but just focused at the state level, running the new California coalition. And I'd be happy to tell you that I'm not going anywhere. Actually, I'm staying right here as an Angelino, proud to be, a business owner, homeowner, activist in our fine city. And so you and I still have many more roads ahead together to keep people informed and engaged to make California better.
See you tonight. Read about it tomorrow, but hear it now on Mottek On Money, live on the air with TRACY Hernandez on that big news. And it seems like yesterday, 2008, it was a different world back then when you created BizFed with the founding chair, David Fleming, back in those days, and did an amazing job galvanizing the business community here. And so much has happened during that time, and still a lot of challenges. And over the years, you've shared the BizFed business surveys, the Pulse surveys, highlighting the big issues here in the Los Angeles area. Among the movers and shakers you're interacting with now, what are the top issues, first and foremost, for the business community here at the moment?
Good point, Frank. So I'm glad you accentuated that we actually constantly talk to people who live here, who employ people here, who invest here. And in real time, each year, each season has kind of a different dynamic of what's most pressing on their ability to grow their business, grow jobs, compete better, and make our communities thrive. And so on that front, some of the most top pressing issues completely still remain on the access to all kinds of housing at every level. And so that all of our employees and all the people that are starting and growing companies can buy their homes, they can, create a good and safe place for their families. So we definitely need to press on to keep making it possible to build more housing. So at every level. So whether that's affordable workforce market rate, whether it's tiny homes, apartments, townhomes, whether it's single family homes, high rise, we need it all. So that remains. Of course, we're continuing our fight, and we've been on the front line to tackle poverty and homelessness and getting more throughput so that the solutions actually work for more people. We've passed lots of legislation and funding and policy so that we can humanely and effectively take care of our unsheltered neighbors so that our streets, our neighborhoods are clean, they're safe, our kids can get to school, our customers can get in and out of our business, and so on. The other thing, though, is constant, reliable, affordable access to energy and water. Those two things keep resonating with business owners, large and small. And so we're working on solutions on those fronts. And then, of course, we're in Los Angeles, and we have these iconic sports and entertainment events coming to us constantly. And it's very exciting. So whether it's FIFA and it's Super Bowls and World Series and so on, but of course the big one are the Olympics in 28 and the Special Olympics. So much to do there. And then lastly, I just say, effective rebuild from the fires and devastation that we have experienced is something we've just got to get faster at, better at.
On the homeless front, I want to immediately extend an invitation for you to appear on the Way Home radio show and podcast with Mark Hood, the CEO of the Union Rescue Mission, and certainly want to get your impressions on that important issue in the week ahead. But first of all, huge congratulations to you, TRACY Hernandez, for your leadership of BizFed here in Los Angeles and now the new California Coalition. Of course, Google up those organizations to support TRACY Hernandez in all of those efforts.
Bruin fans, fall is finally here. That means UCLA football is back in your life. Head out to the Rose Bowl to enjoy America's best tailgating and to make more unforgettable memories with the Bruins. Nico Iamaleava and the Bruins are ready to make an impact this year, and we need you cheering them at the Rose Bowl. Visit UCLABruins.com or call 310-UCLA-WIN to lock in your tickets today. 310-UCLA-WIN.